You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Wednesday, October 24th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from Investing.com. It's the top 5 things to know in the market on Wednesday. The first thing to know is U.S. stock futures pointed to another triple-digit drop this morning. U.S. stock index futures pointed to a sharply lower open for the second day in a row as investors looked ahead to a slew of corporate earnings releases and economic data. Second thing to know today is Boeing earnings highlight pre-market action. Boeing earnings ahead of the opening bell will be the most anticipated report in pre-market hours as the busiest week of the third quarter earnings season continues. Along with Caterpillar, which reported disappointing results on Tuesday, Boeing has been seen as a proxy for the status of U.S.-China trade relations. The company is expected to report adjusted earnings per share of $3.53 on revenue of $24.28 billion, according to estimates. Besides Boeing, other notable firms reporting before the market opens include AT&T, United Parcel Service, General Dynamics, Northrop Grumman, and Boston Scientific. Third thing to know today is Microsoft, AMD, and Tesla results are due after the close. Things will remain very busy after the market closes, with Microsoft, Advanced Micro Devices, Tesla, all due to release their latest earnings reports. Microsoft is expected to report adjusted earnings per share of 96 cents on revenue of $27.9 billion, while AMD is expected to report adjusted earnings per share of 12 cents on revenue of $1.7 billion. Tesla, which on Monday announced that it will release its earnings far earlier than expected, is forecast to post revenue of $6.06 billion. However, Tesla's commentary on future production and sales usually have a larger impact on its stock than reported revenue and earnings per share. Joining them after the close will be Ford, Visa, Whirlpool, and Align Technology. Fourth thing to know today is the dollar jumps to a 2-month high. Away from equities, the dollar was broadly higher against a currency basket. The U.S. dollar index, which measures the greenback strength against a basket of 6 major currencies, was up 0.3% to 96.02, the most since August 20th, boosted by a weaker euro. Investors are keeping an eye on a number of data points expected this morning. At 7 a.m. Eastern, MBA mortgage applications are expected, followed by the FHFA House Price Index. That was at 9 a.m. Eastern. The latest survey on private sector activity from Market Economics was due out at 9:45 a.m. Eastern, and new home sales at 10 a.m. Eastern. Finally, the Federal Reserve releases its Beige Book, a collection of economic anecdotes from each of the central bank's 12 districts at 2 p.m. Eastern. On Tuesday, President Donald Trump stepped up his attacks on Fed Chair Jeremy Powell for raising interest rates. I'm just saying this, I'm very unhappy with the Fed because Obama had 0 interest rates. Every time we do something great, he raises interest rates, Trump said. The fifth thing to note today is EIA's weekly oil supply report. In commodity markets, U.S. Energy Information Administration will release its official weekly oil supplies report for the week ended October 19th at 10:30 a.m. Eastern. Analysts expect the EIA to report a climb of around 3.7 million barrels in crude supplies. If confirmed, it would be the 5th straight weekly climb in domestic oil inventories. After the market closed on Tuesday, the American Petroleum Institute said that U.S. crude supplies rose by 9.9 million barrels last week. Oil prices added to their hefty losses from the day before amid reassurances. Our second story today, in case you missed this, it's from investing.com. Asian markets turned positive as Chinese stocks reverse losses. Asian markets turned positive in afternoon trade on Wednesday as Chinese shares reversed losses on stimulus hopes. China's Shanghai Composite and the Shenzhen component climbed 1.2% and 0.5% respectively by 1:30 a.m. Eastern, while Hong Kong's Hang Seng Index gained 0.5%. Reuters reported on Wednesday that China's state planner approved fixed investment projects worth 697.7 billion yuan from January through September. Last week, President Xi Jinping offered support for the country's private sector, while the State Council also said on Monday that it would support bond financing by private firms, adding that the People's Bank of China will provide funding to facilitate this. Although the central bank did not provide any details of the size of the plan or a timeline at the moment. Our third story today is from CNBC.com. Mortgage applications weaken further as interest rates rise. The Columbus Day holiday appears to have messed around with the mortgage numbers, but a week later the numbers are now clearer. And so is the message. Higher interest rates are hitting homeowners hoping to refinance and home buyers hoping to get in on the fall housing market. Total mortgage application volume rose 4.9% last week from the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. This followed a large drop the week before, when the mortgage numbers were not adjusted for the Columbus Day holiday. Taking that out now, mortgage volume is lower than it was 2 weeks ago for refinances and purchases. Volume was also 16% lower than the same week a year ago. And that, ladies and gentlemen, is news you can use for today, October 24th, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider. The
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.